We'll be going over Schedule SE, part of your Form 1040 for self-employment tax purposes. So certain people must pay self-employment tax. For example, if you're self-employed, you can either be in business for yourself, either farm income or non-farm income, you're considered to be self-employed. If you are a church employee or an employee of a church organization, you must pay self-employment tax if you earned more than $108.28. So these are churches or qualified church-controlled organizations that have a certificate in place exempting them from paying self-employment tax. So if they're not on the hook to pay the employer's share of the self-employment tax, then that self-employment tax responsibility falls on the employee. And then ministers, members of religious orders, and Christian Science practitioners generally must pay self-employment tax for services performed as a minister or a member of a religious order who has not taken a vow of poverty, or a Christian Science practitioner. However, you can, if you've already filed IRS Form 4361, which is the exemption for people in those categories, again, ministers, members of a religious order, and Christian Science practitioners, you can file to opt out of Social Security and Medicare. So if you have not done that, then you have to pay self-employment tax. And there are certain aspects of your income that have special tax treatment. When we go through these, we go in a little bit more detail in our article on our website that I'll tell you how you can get to later. But we go through a little bit more detail about what you should and should not include in your self-employment income. There are lots of different situations, but generally, if you're in business for yourself, if you've received compensation as a independent contractor, as opposed, on a Form 1099, as opposed to receiving W-2 as an employee of an organization that's not a church, then you would generally have to pay self-employment tax. And to do that, you complete this one-page schedule, which accompanies your Form 1040. So we've gone ahead and started with this example with our hero, John Doe, the name of the person with self-employment income, as well as their Social Security number at the top. And then we get into part one. There are two parts to this. Part one is mandatory. Part two is an optional, actually contains two optional methods that you may be able to use to calculate your net earnings. And if one or both of those optional methods results in a lower tax liability for you or increased Social Security benefits, whatever your intention is, you can pick the situation that best fits you. So we're going to go through this for our hero John Doe, and then we're going to kind of go back and replay some scenarios that he might not every person is going to complete every single item of this form. Most likely church employees are not also netting farm income, things of that nature. So we'll kind of go through some of these hypothetical situations after we went through the form. So at the very top of the form is a section called line A. So if you are a minister, member, or a Christian Science practitioner, and you are exempt from Social Security and Medicare, but you had $400 or more of other net earnings from self-employment, then you would check this box in part one. And you do that specifically because you might have to pay self-employment tax on outside income. If your only income that's subject to self-employment tax is church employee income, then you would basically skip lines 1A through 4B. You would enter 0 into 4C, and then you go on to line 5A, enter your church employee income. So in John Doe's situation, he is not a practitioner. He doesn't meet any of those criteria, so we're going to skip that. In line 1 and line 1B, or 1A and 1B, if you use the farm optional method, you will skip this section specifically because you'll be entering the amounts into line 4A directly from your farm optional method. So in this case, we're going to say that John Doe does not have any farm income, nor is he going to select a farm optional method to report self-employment earnings from that non-existent income. So in line 2, there's another optional method for non-farm self-employment income. Again, you might want to run through both of these scenarios to see which one's better for your particular situation. But if you use the non-farm optional method in part 2, then you'll skip line 1. In this case, we're not going to skip line 1. We're going to report $100,000 of earnings that came straight from John Doe's Schedule C. So in this hypothetical situation, he is a self-employed sole proprietor. So he completes Schedule C, and in this situation, he's reporting $100,000 of his net profit in line 2. In line 3, we'll add everything that was previously listed, which consists of $100,000. Now in line 4A, if line 3 is more than 0, which it is because it's a profit and not a loss, then you would multiply line 3 by 92.35%. So if you elect one or both of the optional methods, then you would enter those the totals of line 15 and line 17 into line 4B. So in this situation, we did not. We're simply going to bring that number down. But let's imagine that we used one of the optional methods and we put in an extra $10,000. Then we would bump this 92,350 up to 102,350. That's how that situation will work. In line 5A, we're going to enter church employee income. Again, I'll hypothetically include $10,000, and then we're going to multiply this amount by 92.35%, and that's how you would handle that. So we'll add those lines 4C and 5B. In this case, we're just going to bring down the 92,350. In line 7, this represents the maximum amount of combined wages and self-employment earnings that are subject to the Social Security tax, or 6.2% of the railroad retirement Tier 1 tax. So that's also known as RRTA. Very few people are under that retirement system, but it is there. So the IRS publishes guidance to cover that as well. In 8A, enter the total Social Security wages and tips, the total of boxes 3 and 7 on your Form W-2 and railroad compensation. So box 3 covers Social Security wages, box 7 covers Social Security tips. Now, if this happens to be $147,000 or more, you'll skip all the rest, lines B all the way through 10, and then you'll pick it up back at line 11. So in this situation, let's pretend that John Doe had an extra $10,000 of W-2 income as a part-time employee elsewhere. Unreported tips subject to Social Security tax. You'll find that on IRS Form 4137, unreported tips subject to Social Security tax. This is the line 10 item. This is specifically for Social Security. Later on in that form, there's also a Medicare line. And 8C will enter any wages subject to Social Security tax from IRS Form 8919. This is the form that documents uncollected Social Security and Medicare tax. So if your employer, for some reason, did not withhold the employment tax from you, the Social Security and Medicare taxes from you, then you would have to report that. And then in line 8D, we just add everything up, and in this case, we get $10,000. So all of these different tax forms, I'll put links to them. There are links to them in the article. I'll put them in the comment section or in the description of this video as well. So if you're curious about any of those forms, feel free to look them up through the links, and you can see the videos on the channel as well as reading the articles on our website. In line 9, we're going to subtract line 8D from line 7. So the 147,000 minus 10,000 is 137,000. And then you're going to multiply the smaller of either line 6 or line 9 by 12.4%. So the smaller of those two is the 92,350 number, and we're going to multiply that by 12.4%. So when I do that, I come out to $11,451. Now, we're also going to multiply line 6 by 2.9%. And this number comes out to be 2678. So what these represent, the 12.4% represents both the employer side and the employee side of your Social Security tax. Since you're self-employed, you have to pay both the employer's portion and the employee's portion. And then in line 11, you're doing the same thing with the line 6 amount. So the reason those calculations look a little bit different is because this 147 amount is directly related to the line 9, which is the ceiling that you can't be forced to pay Social Security tax above this ceiling on self-earning. So if you've earned $10,000 that an employer already withheld Social Security tax on, you don't need to pay that over here. So they back that out, and then you pay both sides. That's the line 10 number. And then regardless of how high your income is, you're paying 2.9% of the total compensation up here. And that's regardless of whether or not you have any information in line 8. So then you add these two numbers, and that represents your self-employment tax. So we get $14,129. So this goes not only in line 12, but you put in Schedule 2, line 4 of your Form 1040. So Schedule 2 represents all the additional taxes that did not above and beyond your income tax liability. So that's an additional tax, but then you can take 1/2 of that as a Schedule 1 deduction. So this is basically an above the line deduction you're able to deduct 1/2 of the self-employment tax that you paid, take that as a tax deduction on your tax return. So that number is actually $7,065. So in essence, you're paying the $14,129, but then you're going to exclude the $7,065 from your taxable income on your Form 1040. Now, all of that, what you can do in part 2, and I'll go over each of these farm optional these optional methods. So in this scenario, let's pretend that John Doe had gross farm income that met this criteria here. So your gross income, which you can find on either Schedule F, line 9, or Schedule K1, box 14, with a code B that says, that indicates farm income. If your gross income was not more than $9,060, or B, if your net farm profits, as represented on line 34 of your Schedule F, or box 14, code A, on your Schedule K1, if that is less than $6,540. Then your maximum income for optional methods basically is this number right here. So $6,040. Let's imagine that you would just enter the smaller of either 2/3 of your gross farm income or this amount. So let's just, and this amount happens to be the 2/3 of this. So let's just imagine that his gross farm income was $6,000. He would enter the smaller of this, or $4,000. And then you would also include this in the line 4B above. Okay, so that's how the farm optional method works. Now the non-farm optional method, you can only use this method if you meet several criteria. One, your net non-farm profits are less than $6,540, and they're also less than 72.189% of your gross non-farm income. So those numbers are reported. So your net non-farm profits will come from Schedule C, line 31, and Schedule K1 of your Form 1065, box 14, code A. So the difference between your net farm profits up here is that you're backing out from the box 14 code A number. You're subtracting the amount that you would have already entered on line 1B with respect to your farm profit. So you're taking that out and replacing it with your farm optional number. Whereas in the non-farm optional method, you're simply taking the number straight from the form itself. And then so your gross non-farm income numbers come from Schedule C, line 7, and then Schedule K1, box 14, code C. So, and then finally, you have to have net earnings from self-employment of at least $400 in 2 of the prior 3 tax years. So you can't use this method more than 5 times. But what you'll do is you'll subtract line 15 from line 14. You get $2,040. And then you'll enter the smaller of 2/3 of your gross non-farm income, or the amount on line 16. So let's imagine that your gross non-farm income was $10,000. Then you would enter this, you would take 2/3 of that and determine that this is a smaller number. That's the number that you would add to the line 4B amount up here. So this $4,000 now becomes $6,040. So there you have it. That's all we have for this article. There are a lot of details and situations that we cover in our article, which you can find on teachmepersonalfinance.com. Simply type in Schedule SE in the search bar, and you should see our in-depth article. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, please post them in the comments section. Thank you very much and have a great day.